understand that and much more, let's welcome on board Mr. Suvankar Sen, the MD and CEO at Senco Gold and Diamonds. Mr. Sen, hi, good afternoon, and thank you for your time. Quarter three has been an exceptionally strong quarter for you across all fronts. Now, while we understand that a lot of this 39% SSSG that we've seen was driven by the festive and wedding demand, what would be a realistic SSSG number to expect going ahead?
See, a realistic SSSG, whenever we do a business model and a forecasting, we keep it at anything between 12 to 15%. And the new store openings that we keep, that is at about 4-5%. And that is how every year on year, whenever we target a growth of 18 to 20%, this is how we would like to kind of have a realistic number. What we see and what we have been seeing for this particular financial year and this particular quarter, the high growth numbers that we have seen in top line or SSSG is driven largely by the great increase in the price of gold. So what we have seen, if you look at deeper into the volumes for quarter three, our volumes were down by 3%. YTD 9 months, the volume was down by about 10%. But what we tried to do is create jewelry which is as per the need of the customer, fitting into the budget of the customer, fulfilling their requirements, and that is what has kept us going. And with the gold prices, if you look at the last 9 to 12 months increase in gold price, it's gone up by almost 65%. For the Q3 itself, from 30th September till 31st December, it went up by 23%. So all these things adds up to the value growth of 50% for the top line. So this is how one has to look at the numbers.
Okay, so that is on your top line growth. But Mr. Sen, talk to us about your EBITDA margin. Very strong move here as well. It's coming at north of 13%. Going ahead for FY27, is your margin guidance still between 7.5% to 7.8%? Would you like to hike it?
Yes, I think that a sustainable business EBITDA margin would be anywhere between 7 to 8. We had started off the year with a 7.2 to 7.5% EBITDA margin, and I would say that as we are nearing the end of the year, our guidance, which is sustainable EBITDA, is anything between 7.5, 7.88. What you see particularly in Q3 with a very high number of EBITDA margin has, if you look at the last 3-4 years performance of Q3, except the last particular quarter of last financial year, where there was an impact of the duty cut and the price movement, where there was a loss that was came into Q3, but for the whole year, it was normalized. But this particular year, we've kept our hedging percentage at about 55 to 60%. So this upside in the gold that happened, there you can attribute about 2.5 to 3%. And the rest of the margin of about 9.5 to 10% is what the actual EBITDA is, which has been coming consistently over the last except the previous year, the last 3-4 years. And, we had a 34% growth in diamond jewelry sales. Our own store sales growth and the share of the overall business was higher compared to the franchisee share of business. These all numbers add on to the overall margin scenario. And I think that for Q3, a good 9.5 to 10.5% is what we see an EBITDA. And for the whole year, if you average it out, anything between 7.5 to 7.8 is the sustainable business EBITDA.
So this 9.5% mark, Mr. Sen, you mean for quarter four, right?
No, for quarter three, what you see as 13.2,
okay.
You have to attribute 3%.
Got it. Understood.
The remaining 10% is what has come from the business on a normal making charge income, diamond income, all those standard incomes.
Understood. And Mr. Sen, talking about your top line growth, earlier guided figure was between 20 and 25% for FY26. How much are you looking to clock by the end of the year, and what would the outlook be for FY27?
So again, we will be guiding around 25% plus growth in Q4. And if you all together, financial year, our overall numbers were 6,400 crores. So I would say that this particular year, with a 25% growth level, we will be somewhere closer to 8,000 crores. That should be the kind of this year's numbers as we end Q4 is going to look like.
Okay, and talk to us about your recent stake acquisition in Melora. How is this acquisition going to contribute to your top line? And also on your lab-grown offering Sense, how is that performing? What is the outlook there?
See, these all are future initiatives that we intend to kind of take a strategic call. The objective is that, see, we are an 88-year-old legacy company. Our core competency is to work directly with the handcrafted karigars, create handcrafted jewelry. There's an element of trust associated with us. Now, when we have to look at catering to the new generation, their demands and their culture, so we need to have these new age brands that would cater to the changing lifestyle. So, in terms of overall top line numbers, I would say that initial phases, Melora will help us with catering and connecting with the new generation. The numbers, see, anyway, our ATV, our average ticket size, the value of the bills that we make is around 90,000, 95,000. In today's day and time, it comes to around 5 to 6 grams of gold. So, we have been always catering to this lightweight segment in a very, very big way. And this will only be an added portfolio and a vast variety of designs for the consumers. And as far as Senes is concerned, again, it's a lifestyle strategy with the new age lab grown diamonds, because see, lab grown diamonds is a made in India product. I think that it is something that will help the nation overall as we put in more funds and put in more branding and make it a desirable object for the consumer. And it makes a lot of sense as well, especially with the design aspect of it and making it value for money. So lab grown diamonds, perfumes, and leather bags, I think those will be the futuristic design led, where our whole thought process of Senco to be a house of design, known for design, is where it will all play out like.
Okay, Mr. Sen, due to paucity of time, I'm going to have to let you go. But thank you so much for taking the time out and speaking with us. Always great chatting with you. Look forward